where we had pressure for the better part of last week being exerted on the back of valuations for the most part being perceived as expensive. There seems to be some shifting of sentiment despite yesterday's performance. Run us through what you're making of current valuations at the NSE right now.
Good morning, Alishia. Thank you for having me on. The valuations are not far off from the reality on the ground. If we look at the trends over the past 6 months, looking at the last half of 2010, we see an upward curve, a growth curve in the stock market. And looking also at the indexes, which are meant to reflect the true nature of how the market is performing, we also see a kind of upward gradient, and I think this will be sustainable towards the close of the year, and we might see the 10-15% gains we had analysts project. And also maybe looking at the 20 share index and looking at the average for last week, there may have been a lull, and compared to the first week, second week of October, we had it at around 4,620 points. But looking on, I think valuations are on point.
There seems to be increased demand for blue chip stocks, in particular, the likes of your East African breweries and Bamburi Cement. So is this a case of the bigger players buoying the market here while those outside the blue chip bracket tread water?
Yeah, indeed. I think that's exactly what's happening, and more so I think it's because of the perception that these companies are set to perform well, and they have performed well. Most of their results have been good. Looking also at the other blue chips, maybe if you talk about KenolKobil, if you talk about Barclays Bank and other commercial banks, these are stocks that have actually really performed well, and actually investor interest lies within these stocks. And also looking at the number of trades taking place every day on these stocks are normally foreign trades, and about 2/3 of the turnover every day is from these foreign investors. So I think we'll see a sustained demand for these stocks, and looking forward, we may actually see the growth as projected at 10%.
Let's hone in on KenolKobil there. It's outlined its Southern Africa expansion plan and is looking to set up shop in Zimbabwe after having already opened up in Mozambique. What's your view on the company's expansion strategy?
I think it's a really good move. The company is moving regionally. I think they're trying to grow their operations. They recently concluded the row they had internally here locally in the country, and also looking at the results for the year, they were really good. I think they have the capacity to move out, and also looking at the prospects in the industry they find themselves in, there will always be a demand in the energy sector. There will be always be a demand for their products. And looking also regionally at the economies, they are growing economies, especially in the Eastern African region. There are also economies with increased population. With the increased population comes more demand for energy. And I think it's a good move, and for anyone looking to invest in this counter, they may have to do so now.
And one would assume sitting in a particularly sweet spot where we've got multinational operators looking to pull out of the region to focus on exploration and drilling activities specifically.
Yes, I think there's been some complications when it comes to distribution of these oil products, and most of the oil marketers have been facing the same challenges. We've had internal policy challenges. There's been a clash between the regulator and the oil marketers. We've also more recently had pricing wars between them, whereby we have the government calling on these marketers to lower their prices. But you see, this it may not be so easy, especially considering the international cost of fuel, also considering the levels of piracy that have also affected the shipment of these oil products. So I guess it's a very sober strategy for them to look more into exploration rather than regional distribution.
Robert, you've touched on the fact that KenolKobil has resolved its row with the local refinery over in Kenya. At the same time, though, we had Tom, our newspaper guest, highlighting that there's a warning from the oil companies if disputes with Kenya petroleum refineries over discrepancies in fuel stocks is not resolved soon, we could see further price hikes within the fuel sector. What is the problem that's bubbling over on that end with regards to that specifically? Because it's not only KenolKobil involved there, it's Total, Kenya Shell, Oil Libya, Gapco and Galana Oil as well.
Yes, and this is actually begs the question of whether the industry is really deregulated, because we've been, I think this should be about the 16th year in deregulation, and we have been seeing a lot of government intervention when it comes to oil, the operations of these companies, and this may actually affect the consumer more than anyone else, and the grass is what gets hurt when two bulls fight. And right now, I think the consumers are the grass. And looking at what these wrangles go around is about the pricing. And I think they should come out clearly and maybe map a way forward and tell us how they go about resolving this issue. But I think the bulk of it lies with the government of Kenya.